Hello, everyone. Welcome to Smart Investing. Here with another episode, another video, a long video for you guys. Today, I'm going over stock selection number 4 of the Wall Street stocks for Q1 2023. I have here ticker symbol VICI Properties, VC Properties. So let's begin. We're going to be going over fundamentals, technicals, and quants. First and foremost, we have here $34.51. Volume is really high, extremely active. This is as high as highest as it gets for a volume of 5 million. We have here a market cap of 35.68. So this is actually a large company we have here. Now, 52-week high and low, difference of about $10. It's not much to brag about, not much to look at. But as we can see here, this stock is approaching new highs. I think once this stock breaks new highs, I think this stock would definitely be a game changer. If we do the math on this, that is only a difference of $1 and, let's see, to be exact, $1.18 away from breaking new highs. So it's nearing its high. Now, PE ratio 32. It's telling me it's growing at a somewhat faster rate. It's in growth mode, but again, I've seen higher numbers than that. Earnings is at 1. That's pretty low. And dividends 1.5. Have a dividend yield of 4.52. Right away, earnings doesn't seem like it can cover the dividends. Now, when we look at the free float, meaning how many shares, they have plenty of shares for this stock. I mean, insane. So this would definitely support the volume. I can actually see the volume even more than that, going way more than that. So as we can see here, for the last 5 years, we have here, you see, in 2020, break new highs for 2021. Then it reached its peak in June 2021, went down. Then it broke new highs back in 2022 in August, dipped down for 2022, and now look at this sudden surge. That is an insane comeback for it to do that. And then we can see here from basically October to December, it reached pretty much almost new highs. That was pretty insane. And then from 2022, actually, it's gone up since June. And again, it only went down for a few months and then right back up in October. A slight drop, but then again, can basically say from October till now, it's close to breaking new highs. I think it will break new highs by the rate it's going. Had some choppiness back in 2022. That was normal for 2022, but now we're in a different year. So sky's the limit until we start to see reversals again. So for this stock, fundamentally, I do not like the fundamentals so far from what I'm seeing. But again, there's still more numbers to go over, and this is only the first page. As for technicals, I would definitely like to see it reach new highs. And Once it reaches new highs, I would like to see this stock in an uptrend for at least the next 3 months in support of its earnings. And then once it reports those earnings, then for sure, this is definitely a stock to pay attention to. So the earnings release date is February 23 of this year. So a lot of 2s and 3s to look at here. So February 23rd. So that's actually in a few more weeks. So that is definitely a date to look at, especially that whole week it falls under. Whether it's the week before or the week of or the week after, you want to pay attention to that date getting close to it. So now, when I look at some more financials here, so we can see Q4 2021, looks like they beat it or met expectations. Then Q1, it missed. Q2, it missed. And then now we're waiting for Q4. And they've missed estimates. And again, stock has been going up for the most part. It's dropped from its earnings. When it's reported, it's gone up. And then right here from its earnings, it's gone up. But in between that, it's gone down again. So we have here the earnings back in May went down, then it shot right back up. Doesn't make sense. Even if you went for 4 straight misses and the stock is going up, that's highly concerning to me. That I could understand at one time maybe you miss it and the stock goes up. Maybe you have future expectations for it. A lot of money managers are getting involved, institutions, hedge funds, and all the top names, all the big players are in. Some inside information. It's typical. It's not unheard of. They don't talk much about it, but somebody always knows something. And, people get involved. So, anyhow, moving on to the dividends real quick, part of the financials. Well, let's look at the rest of the financials. Look at the annual report. I might have to close this page and open it up again. We'll do that because it's not giving me numbers that I want to look at. So now we can do it. Probably a little lag on the app or something. So return on assets, nothing for 2022. Hasn't showed me anything for 2022. Return on equity, it stays about the same. Earnings, everything's about the same. So yeah, everything's about the same. The debt went down from 2020 to 2021, which is good. Now income, it's gone up slightly. Revenue, I would assume it's gone up. Not bad. So balance sheet has gone down a lot. That's really good. From 44% to 30%. That's a big change, actually. Close to 15% drop, which is really, really nice in debt. Operating cash flow and investing. So we have here definitely positive cash flow. We have that about, I'm trying to do the math in my head. So guesstimating at least 400 million in cash flow. And this company is a specialized REIT. So real estate investment trust. Now for the strategy, so I went over the technicals, which to me, they look okay, but a little bit chop. They're close to their highs. So again, growth momentum there. So we have here at first 20 analysts rated this at 100%. Now I guess they changed their mind. Now it's a hold. So we have here 90% recommendations for a buy. And now we have here for the quant ratings, which is for strategy. Looking at the rating wheel, we have momentum. I can agree that it's pretty high. I can't say a number. I just, out of 5 choices, I say really below average or below average, average, then above average, and really high. So for the value, I'll look at that in a few minutes. For growth, it's hard to say that a company, for it to reach new highs, it's growing. I'll have to look at that, and then I'll look at this in a minute. Quality, we'll look at that in a minute. So we'll actually come back to the quant ratings. So we want to continue looking at this. So let's look at the very first page again. So again, PE ratio at 32. I see it more as a growth stock, even though it is a dividend stock. It can be both, actually. So it does have potential, I would say. So looking at the income, we have here 39 cents that they paid out for their last payment. Then we have here a total of at least $1.20. Then they had a raise in 2021 from 33 cents to 36 cents. Overall, a raise of pretty much 6 cents, which I think is pretty bad, but still a raise from 2021 going into 2022. And years prior to that, it looks like they have been giving decent raises. So we have here from 2019, then 2020. So raising dividends, always a good sign. No splits, so that's pretty good. Now for the quants, looking at the quants again. So we have here for a growth stock, overall decision, yes, maybe, or no. I would say yes. They're only, again, $1.18 away from their new highs. Then income, I don't like their income, sorry to say. Yes, they have rising dividends. They're doing okay, but overall, I mean, maybe you can find it in the comparing to the real estate sector in itself. The company needs more work. On the fundamentals, they seem okay, but they could be better. And the reason I say that is because of their earnings. Because for the most part, everything seemed good. It's just their earnings seem a little bit lower. It really depends what this company is involved with. If they're involved with retail space, good luck to that. It'll be real tough for them. So I think their weakness really is in their earnings. That's the only thing that I see. But again, for positive feedback on this company, again, the income, I think they're better companies than that. So for income perspective, so add this to a portfolio, I said no. For growth, I would say yes. Better as a growth stock. Momentum stock, I would say yes. And again, time period, definitely short term. Definitely short term. I wouldn't add this stock more than a year. Definitely, I'd say 3 to 6 months, and we'll take that and see from there, and then hopefully and maybe they can continue doing good for the rest of the year, and it can be, uh, you know, stayed in the portfolio for longer, or maybe even do better fundamental wise. For the price, it's hard to say. For the quality, we'll look at that right now. So for the price, we have at $34. And then for the PE ratio, it is at 32. Now, just depends. We're going to read the profile. This is where everything comes in handy. And this last page, which is the profile. We're going to look at the composition, how many companies are involved, and then those prices that are involved. Where do they rank against their peers? Now, I want to read a little bit about the company. So, they are in the gaming industry. So, maybe some casinos, hospitality. So, that will mean like hotel stays and all that, and entertainment destinations. That could mean, like Vegas and uh, maybe some traveling experiences. Maybe they own some more hotels in different parts of the US. So it looks like they do long term leases. Now, when it says entertainment destinations, uh, I don't know if that's for a variety of ages, but it says here golf courses. So I guess what they mean by entertainment, it's more of a relaxed scenery. It looks like their target audience is more for, I want to say senior citizens, but it's for more of the older crowd when it comes to golf courses. You don't really see young people playing golf unless it's mini golf. Um, but it also says, again, entertainment destinations. Now, it says the golf course business is approximately only 4 golf courses, but the diverse portfolio, it includes, oh, see, I was right, I guess. It says it includes Caesar's Palace, Las Vegas. So they're involved in resorts. Uh, Resorts are actually more costly than hotels. And with the resort, you can actually host events, and they have bigger lobbies and just more space basically than a hotel, uh, and venues and stuff. So you can actually uh, have more fun on site compared to the hotel. So aside from Vegas, what I'm trying to see what other locations they're involved with. Um, but definitely Vegas is definitely a great location. Definitely a great location. I have no issues with that. I would like to try to understand where they're trying to grow their business or expand on their business. So also here it says approximately 250 restaurants, bars, nightclubs, sports books. Looks like they own the whole strip or something on Vegas. So it says 34 acres of undeveloped land. So they're not sure what they want to do to that, even though that is leased to Caesars. So they have land, they just don't know what they want to do with it. Uh, to be honest, Vegas is known for being Sin City. So, in all honesty, they can actually use that land for obviously recreational purposes of all ages. So, you might as well convert that land to somewhat. I mean, you can't really have kids near a gentleman's club. That would be outrageous. But again, Vegas is not really a place for kids. It's more of the adult uh, scenery. I've never been to Vegas, but obviously that can be looked on Google and stuff. But again, that's more of the adult crowd. So, so yeah, they would have to uh, involve more adult and legality for people, I guess, in their 20s or higher. Um, just, I guess you can still do fun activities and still have a bar and stuff like that. I mean, I've seen places where instead of doing just the regular golf course and stuff, I mean, there's other ideas you can do and other sports activities and leisure activities you can do. I know of a few, but I'm not going to mention it. So, yeah, they just have to have more creativity. So, I do like their business model. So, I think that would actually come from the quality. So, I think they actually have high quality. If I were rated to 1 through 5, so 3 being average, I would say it's very, very high. I give it a 5. And then as for their pricing, for their value, again, that's hard to determine. Uh, it's a hit or miss. Some people love going to Vegas and traveling. You have other people where you're always gonna have people that go one time and they just might not like it, or they expect something and then it was totally not what the experience that they expected, and then some people are just hard nosed and say, you know what, I had a bad experience. I'm never going again. I'd rather go somewhere else. Uh, and I'm just gonna leave it at that. You have some people that are like that, and it's just hard to convince them unless otherwise, unless other situations arise where I guess either remodeling or change person's decision somehow. But again, one bad experience can be forever, and that just ruins sales for companies. So anyhow, as for this stock, it's hard to price it. It's hard to price it. Uh, I'm sure people still love going to Vegas, but anyhow, this is their competition, and I guess you can compare prices to this. So it was in the $30 range, right? $34.51. So specialized REITs. So we have a competition of, we have 90 companies here in the specialized REITs industry. That also might be from the secondary, uh, from this sector. So it might be a mix of that as well. So with that said, specialized REITs. So we have prices. Do we have anything above $30? So we have this one, GLPI. Then who else we have that's above 30? So we have Universal Health. That's 2 people that are above that price. We have 3, 4. We have 5, 6, 7. We have 8. We have 9. We have 10. We have 11. 12, 13. This is about the same, so I say tie for 13. We have 14. 15 properties, 15 people. 16, 17, 18, and then we have 19 people. So they fall around number 19 on the pricing list out of 90, which is kind of the higher end, more, I mean, more on the, not too expensive, but more on the expensive side. So for this stock, would I add this to a watch list? I would say no. Uh, Overall, I would say no for the long term. For the short term, I would say yes, though. I like this stock because, again, it's reaching new highs. From a technical standpoint, it's close to reaching new highs. Literally, I wouldn't be surprised in the next 2 weeks it blows past, you know, its new highs. And again, we're reaching earnings pretty soon. Last earning was in November, so I'd wait for earnings. If this stock shoots up past this new highs, that would be tremendous. And it'll be a cakewalk from there. So short term, I can see this stock doing okay, getting in and out, and that would be it. I'd give it 6 to 9 months at most. I would not invest in this long term. And again, you get some dividends, but that's not the strategy. You're just fortunate enough to have that. And aside from that, um, we can try and hopefully keep it for the 9 months instead of 3 months and gain more capital instead of leaving it, for 3 months. So, longer you hold it, hopefully the more money you make. So, yeah. So, short term, I like it. Long term, no. So, short term, yes. Long term, no. So, overall, I'm gonna say no. So, that's my decision. That is my decision on it. So thank you guys for watching. If you haven't watched it, sorry I took too long. I know I take too long. This is all the information provided before me. I like to, I wouldn't say I like to talk a lot, but I just like to cover everything. So thank you guys for watching. I'll see you guys in the next one.